AOL. The first thing I do is I go and I write in plus, minus, minus, plus, minus, plus. Okay. And you actually should write down this little notes as well. Okay. Now, number 1. Purchased buy equipment from Dennis and we paid. So if we pay, it's cash. If it's cash out, so it's CPJ. If it is CPJ, bank is immediately credit and assets minus. Okay, now I go look. Please stop talking. The amount I paid was $20.80. If it's CPJ, my document is always bank statement. Always. I'm waiting. Now what did I buy? Oh, I bought equipment. Equipment is also an asset, so it's a plus minus. I've got 2 signs. I can't have more than 2 signs per line, which means the other columns is zeros. Everybody fine? Number 2. We pay. Pay is cash, and it's cash going out. Cash going out is CPJ, and bank is credit, and assets is minus, and if it's a CPJ, my document is always bank statement. Now, what did I pay? I paid 900 Rand for a private telephone. The moment it's private, it's what? The owner and private gives me drawings, ne? So it's going to be drawings. Now I know drawings is on the debit side. It's a owner's equity, and on the debit side of owner's equity is also a minus. I've got 1, 2 signs, which means this one is a liability, and I know the amount is 900. So you can see, what do I ask myself? First question I ask, is this cash or credit? If it's cash, I ask, is money coming in or is money going out? In, CRJ, bank debit. Out, CPJ, bank credit. If it's a credit transaction, I ask, did I sell? DJ, debtors, debit. Or did I buy? CJ, creditors, credit. Okay, that is always like that. Let me write it down in a nice way for you, and I want you to copy it somewhere. You've got an open page. So let's do this. So I ask, is it cash or is it credit? If it's cash, is it money in or is it money out? If it's money in, it's a CRJ. Then bank will be debit. If it's money out, it's CPJ. Then bank will be credit. Okay. Now, if it's credit, if I sell, it's DJ, and debtors control will be debit. If I buy, it's CJ, And then my creditors control will be credit. So now, let's read transaction 3. So 3 says, we received a EFT. Now, EFT is money. So if we received, it means it's cash, it's money coming in, so it's CRJ bank debit. So CRJ bank debit, assets plus. Shop. Now I see, what did I buy? Oh, what did I get? Oh, it's Van Wyk, and he settled his debt. Oh, I'm sorry, I'm at the wrong one. It's number 3. It's Pulse for the month's rent. So this is going to be rent income. I know rent is a credit. It's a owner's equity. So it's also a plus. So there's 2 signs, meaning the liability is a 0. So if I receive an EFT, remember, EFT means it's directly into my bank, then it's a bank statement. Yes. Who? Okay, let's just again. So, when I receive money, the bank will always be debit. That will never change. And it will always be a CRJ. So that will never change. But there's different reasons why I receive money. So the first reason would be capital. The owner gives me capital, me being the business. So the owner takes money from his personal account and put it into the business account. That's one. And that influences owner's equity, and it makes it more. The second one is income. Any sort of income. So all the incomes you know sales, rent income, commission income. That's the basic 3 that you guys know at this stage. So income influence my profit. Because profit is income less expense. You guys see that? So in other words, if it's an income like sales, rent income, commission income, fee income, it will make my owner's equity more because it makes my profit more. Okay? Third way to get money is when a debtor pays their debt. So I will credit debtor's control, which will make my assets less. Why? Because the debtor's debt becomes less. But the bank always stays the same. Did I answer your question? The same thing goes if I do a payment. The bank will always be credited. But there's different ways that I can pay. Different things. In this case, I paid the creditor. So the liability becomes less. If I pay any expense, pay or buy an expense, my owner's equity will become less. So if I look at this summary I made, if I look at this summary, please listen, because I'm trying to get you to understand this. What will be credited? If it's money coming in, it can be capital that's credited. It can be any income, or it can be debtor's control. Right? If it's money going out, obviously it can be drawings. And now that would be debit. It would be expenses. And it would be creditor's control. Can you see? So this, owner's equity, asset. Owner's equity, liability. Okay. When I go to the DJ, there's only one option. Debtors control, sales. Cost of sales, trading stock. This is the only option at the DJ. CJ, if creditors is credited, what will be debited? Oh, either income, expense, or a asset. That's all. So let's go on. Number 4 says, I must just get the right number 4. Purchase, I didn't put the amounts, nay, and then you're not going to get marks. The amount is 420. Number 4, we purchase goods, which is trading stock, on credit. If I buy on credit, if I buy on credit, it's a CJ. Creditors is credited. So it's a CJ. Creditors is credited. I know a creditor is a liability, and if it's credited, my liability plus. I also taught you the CJ, any credit journal is an invoice. The CJ is an original. What did I buy? Trading stock. Trading stock being a asset, meaning owner's equity is 0. Now, the figure, however, I need to calculate because I got trade discount. So I'm going to say 1950 times, if I get 20% trade discount, it means I only owe 80%. Right? I got that 80 by saying 100 less 20. So what am I actually owing? 1,560. Can you see? I'm not going to show the discount anywhere. I subtract it and I keep it there. Okay. Number 5. Number 5, we received a direct deposit. Is that cash or credit? I receive a deposit. Cash. Is it money in or out? Money in. So it's CRJ, bank debit. So it's CRJ, bank debit, meaning assets, plus it's a direct deposit, so it's a bank statement. Can you see? Your document is 9 out of 10 times bank statement. Okay? So now it's for commission earned. So it's commission income, which is credited. It's the owner's equity, so it's a plus. There's 2 signs, meaning liability is a 0. Are you starting to see the patterns? Okay. Now, my commission is 1016. All right. Number 6. Number 6, they say credit card sales. Yes. Because it goes directly to the bank. I don't touch it. So let's quickly go and look again at my CRJ. So my CRJ, if it's a direct deposit, It's like them making an EFT. It's like a bank statement. If I get the cash, it's a duplicate receipt. If it's a sales, it's a CRR. Okay, so now they say here, and they did this to confuse you. They say here, credit card sales. Is this credit sales or cash sales? You see? This is the trick. A credit card, how does a credit card work? When that person pays with a credit card, the bank immediately transfers the money from his account to my account. Can you see it's like a direct deposit? You guys see that? Okay, so it's cash. I want you to please make sure that you understand that this is cash, not credit. Okay, so now it's a CRJ, bank is debit, and then I know because it's sales, I have a sum. Bank sales plus 0. Cost of sales, trading stock, minus 0. Okay, I also know, because it's sales, I will take both right. You can say bank statement because they basically deposited the money directly into my bank. Or you can say CRR because it's sales. Both is perfectly correct. Right. Okay, now. The plus, yes. No, come again. The CRR. Yeah, the cash register roll. It's because you pay at the till. So, but what we do is we only use that actually in school. We only use that one with the cash sales, not with the credit sales. Yes. Why is it cash? Because if the person pay you with a credit card, who do they owe? Do they owe you or do they owe the bank? They don't owe me. They owe the bank. Because the bank, with that credit card, it gives the bank the instruction to transfer money from that guy's credit card account into my bank account. So he doesn't owe the business. He needs to pay back to the bank. So for the business, it's a cash transaction. Does it make sense? Okay. Yes. You can choose which one. I will mark both right. Yeah. Both is right. You're going to have both. Because if they pay with the credit card, it goes into the cash register. Ne? But also, you're going to see it on your bank statement because it's going to be a single entry on your bank statement. Okay. May I speak aloud? Thank you. So now, I'm going to take the sales price with the pluses, which is 5,600. But I'm going to take the cost price with the minuses. So this is the selling price, this is the cost price. Now this cost price is 33 1/3, which means I'm going to times with 100 over 133.3 repeating, meaning 333333333 till there's no more space on your calculator. Okay, and if your calculator doesn't stop, then you stop when it's about 7 or 8. So, how many? What's the cost price? So it's 5,600 divided 133.333333333. It gives me 4,200. Okay. Now, number 7. Everybody sharp? Number 7. We received a EFT. What's a EFT again? Cash. So, it's money coming in. So, it's CRJ. Bank is debit. Assets plus. EFT is a bank statement. Why did I get money? Because Dlamini settles his debt. So, a person who owes me is a debtor's control, which is also an asset. So my money assets increase, but my debtor's assets decrease because the debtor owe me less. I've got two sides, which means the equity and liability is both 0. And the amount is 780. So number 8, we issued a EFT. So is this money in or out? Out, because now we are paying with the EFT. So it's CPJ, bank credit, assets minus, document bank statement. If it's EFT, it's always bank statement. And we pay Lee to settle our account with them. Ne? So, what do I call a person I owe money to? A creditor. Ne? Don't get confused with a debtor and a creditor. Okay. Now, a creditor debited liability minus, because now our debt with this guy decreased. So owner's equity is 0. And the amount is 3820. Everybody sharp? Last one. Sell goods on account. Is this cash or credit? Credit. Did I buy or did I sell? If I sell, is it DJ or CJ? DJ. DJ is a duplicate invoice, debtors control, debit. And now I've got my little song. Debtors control, sales. Plus, 0. Cost of sales, trading stock, minus 0. Okay. I'm going to take the sales price. Sales price is 17,000. And I'm going to take the cost price. But now, I want you to listen to what I say with. Now, I want to show you this. Can you see they don't give me. Yes, baby? Can you see they don't give me a cost price, but they give me the profit. So what do I know? Cost price plus profit gives me the selling price. They gave me the selling price is 17,000. They tell me the profit is 2,000. So what's the cost price? 15,000. Can you see? You're going to say 17 less 2. No? So that gives me 15,000. Please don't let me catch you like this in a test. What a lot of people do is they will take the 2,000 as the cost price. Okay?